Welcome back to The Explainer. Today, we are unpacking an absolute titan of a financial event. We're talking about SpaceX's historic IPO, and man, the massive ripple effects it's sending through the entire stock market right now. Now look, we've all seen huge public offerings before, right? But what we're looking at this week, it is on a completely different, almost unprecedented scale. Let's just jump right into the numbers. Okay, let's dive into this. $1.8 trillion. That is the anticipated valuation for SpaceX. I mean, it is unequivocally the largest debut ever in history. We're talking about a valuation approaching $2 trillion right out of the gate. Absolute madness. Section 1, the biggest IPO ever. Setting the stage. $75 billion. That is the anticipated capital raise amount. And the sheer anticipation of this event is just palpable. There is a ferocious appetite for this equity out there. We can actually already see that in the pre-debut market behavior, where the shares have already responded with a 9% gain. Investors are basically clamoring to get a piece of this pie. And this brilliantly illustrates a much larger macroeconomic trend we've been tracking. The enthusiasm building ahead of SpaceX's Friday debut, it doesn't just exist in a vacuum, right? It heavily highlights the expected massive growth in the AI build-out. The infrastructure required for the future of artificial intelligence and advanced tech is, well, colossal. And companies pushing the absolute boundaries of engineering, like SpaceX, are viewed as integral pillars in this entire expanding ecosystem. Section 2, the tech ripple effect. Shockwaves in the market. Now, capital is treating different players very differently this week. On one side, you've got this soaring enthusiasm and eager cash for the SpaceX IPO. But then take Oracle. Shares of the software giant actually dropped 8% on Thursday after they announced plans to raise an additional $20 billion in equity and debt for their own artificial intelligence buildout. So investors are fiercely weighing these AI-related investments against each other in real time. And that dynamic leads us to a fascinating trader theory to explain some recent market movements. There's a really strong belief right now that the recent weakness we've seen in the chip sector is tied directly to this IPO. Basically, traders think investors are just, quote, selling the stocks in their portfolios to make room for the IPO. It makes perfect sense, right? To afford a historic $75 billion raise, investors got to take profits from somewhere else. The chip sector, which obviously has had an incredible run lately, became the logical ATM for investors prepping their portfolios for Friday. But we do have to acknowledge that it wasn't just portfolio reshuffling that caused a stumble earlier in the week. We have to look at the broader headwinds from the previous session. Stocks fell largely thanks to a combination of that sudden rout in the chip sector we just talked about, running right alongside a ramp-up in geopolitical tensions with Iran. It created this brief but pretty intense window of anxiety in the global markets. Section 3. A resilient stock market. Thursday's rebound. Let's see how this built across the broader indices at Thursday's close. The S&P 500 rose 1.75% to end the day at 7,394.30. The Nasdaq Composite, which remember is heavy on those exact tech names that were supposedly under pressure, jumped a massive 2.54% to 25,809.66. And the Dow Jones Industrial Average moved up about 930 points, or 1.86%, to 50,848.75. So the three leading U.S. indexes essentially just shook off the anxiety and closed solidly higher. Section 4. Where is the money? Solving the liquidity mystery. So where is the money actually going to come from to absorb this new equity supply? Flooding the stock market with $75 billion in brand new shares is a monumental undertaking. Seriously, is there enough sideline cash to handle the biggest IPO in history without completely draining the rest of the market dry? It's a huge question. Well, the answer lies in the sheer staggering scale of modern market liquidity. The magic number here is $1.7 trillion. According to data from Gavekal Research, in the 12 months leading to September 2025, S&P 500 companies issued roughly $1.7 trillion. So as far as Wall Street is concerned, the stock market absolutely has what it takes to absorb this new supply. So the crucial point is this. When you compare SpaceX's massive $75 billion capital raise against the roughly $140 billion that S&P 500 companies average in issuance every single month, suddenly the giant doesn't look quite so intimidating, does it? The U.S. market generates an absolute ocean of liquidity, and SpaceX is just asking for a substantial but highly manageable bucket of it. To put it in the most digestible terms possible, Gavekal Research provided this brilliant takeaway. The $75 billion capital raise will absorb just a little over 2 weeks of shareholder payouts. I really want that to sink in for a second. That is the true scale of our financial system. What feels like a generational, historic capital drain on the surface is actually completely absorbed by just about 15 days of routine market payouts. Crazy, right? Which leaves us with a really powerful thought to end our explainer today. If the market can easily absorb the biggest IPO in history, literally effortlessly funding a $1.8 trillion company with what amounts to 2 weeks of routine pocket change, what does this mean for the future ceiling of the global AI buildout? If capital liquidity isn't the bottleneck, how fast and how far can this technological revolution actually go? Definitely think about that as you watch the markets continue to move. Thanks for diving into this with me. Keep asking questions and keep learning.